Hey traders, checking in on the stock market today. So we had a bounce day out there as we're heading into the FOMC. There are some falling wedges shaping up. I'll show you what I'm keeping an eye on as we get ready for the big day. So we did a live stream this morning that was public on our YouTube channel. Thanks everybody for tuning in. Got a nice trade there, and we'll go over the trades that I took today. I was very active today because today was a bounce day, and bounces are one of my edges as a trader. So I trade much less when we're not in my edge wheelhouse, and I trade much more aggressively when we are. So the amount of trades today and the amount of capital that I was throwing around was more significant than any time in the past couple of weeks. So from here, we look to the FOMC tomorrow at 2 p.m. Eastern. We have falling wedges on a lot of names, and falling wedges show us bear exhaustion. And we look for falling wedges when we break support and lack follow through. So here on the S&P 500 futures chart, we broke support with no follow through into a bounce. That being said, the bulls still have the burden of proof. If I am a bear, I am comfortable on the daily chart as long as the lower highs keep coming. And right now, looking at SPY, a key level for me in the short term, 429.51. If that level breaks, it's the most bullish that the market has looked in the last week and a half. So that's what has to happen. And that's what we're looking at for the FOMC reaction. Now, I'm not going to have much exposure heading into the FOMC reaction because I have no idea which way the reaction is going to go. But I do know that these falling wedges give me a slight bullish lean. So what do? If we see a bearish reaction, I will look to buy that initial flush down and dip, and then just place a stop, and maybe I'll risk a day loser if we keep dropping from there. But I am going to approach it with a little bit of a bull mindset. I just won't have much exposure until we get that initial reaction. So we'll see what we get. But the simple statement is, if we do not break 429.51, the bears keep complete control. The NASDAQ is the same thing. And if you look back, there are plenty of times where periods of consolidation have ended with falling wedges. And I've said that before in these videos, where sometimes it's on the 12-hour time frame because it's not as prolonged a pullback. But falling wedges to mark market bottoms are fairly common for the S&P 500 and the NASDAQ over the last bunch of years. So I'm watching for it. QQQ has more work to do. Anything under 336.38 keeps the bears in complete control. That's over 2% away. So again, nice bounce. We had a nice hourly bull flag into the end of the day and zoomed in to the 2-minute time frame to spot a falling wedge, which gave me a bull lean for a bull flag into the end of the day. So I had some bull positions because of this pattern, and I first initially started recognizing it probably back around here, and then it played out very nicely. So hourly trend change confirmed. That being said, look at the NASDAQ futures chart and look at the hourly RSI and look at 70. So here we are at 70. 1, 2, 3, 4, 5, 5.5. Very clear rejections from this point. So we know that the futures chart is going to have to confirm a 4-hour trend change if we're going to see any follow through on any kind of daily bounce. So keeping an eye on that as well. If we see further follow through overnight, we're not going to get too excited because we know that 4-hour consolidation is coming. If we see weakness overnight, we scout the 4-hour high or low. So daily falling wedges on watch, but daily lower highs are our guide. I can have a bull lean, but I know not to get too aggressive or too excited until things change on the daily time frame. And as long as the daily lower highs remain, nothing changes. SMH, same deal. Bear breaks with a lack of follow through. Again, you can find a lot of individual names that have these falling wedges out there. Individual names and sectors. So that's the one I'd be watching on SMH. Same deal. If we do not break 258.70, nothing changes and the bears are comfortable and confident. And again, just put yourself in a bear mindset. If I'm a bear and riding this downtrend, then I'm comfortable. And if we break that daily lower high, it's the least comfortable I will have been in the last week plus, because that means if that level breaks, anybody that's been bearish over the last 7 days is then underwater. So that's when the scales start to tilt a little bit and some short covering gets added into any dip buying pressure. So the setup is there. for the bulls, but the proving is needed. Tesla, we're scouting a weekly higher low, anything above 700. Hourly trend change to the bulls at the end of the day, little hourly bull flag confirmed. I do have a small Tesla swing position by playing that hourly bull flag. I chose NIO and Tesla to play on that setup into the afternoon. But same thing, if we do not break 861, nothing changes, just another daily lower high. And we've been setting those daily lower highs for over a month. Burden is on the bulls. We see the setup, it's there for the taking, but you got to prove it. Because if you can't, nothing changes, bears stay comfortable. XLV bull break, this is notable. And I take it back. It's a double top at the moment, trying to see the bull break. If we get over 132.64 and 134.46, again, imagine you're a bear. As soon as that level breaks of 134.46, anybody that's gone bearish in the last 2 months is underwater. That's a notable shift. Without a doubt, the healthcare sector is the strongest major sector that we look at. There are other stronger sectors out there, but out of the major ones and their influence on the S&P 500, healthcare is where it's at. And we could see that shift that's shaping up. Just the comparison between it and other sectors. So, key resistance test, and we're knocking on the door. And again, we can go to the 2-day time frame to condense it down, and it's an inverse head and shoulders. Trying to confirm. Financial sector, daily inside bar, double top at the high of yesterday by 2 pennies. And again, I'm going to view this one, did we change the daily trend here? I'm just going to condense it down to the 2-day time frame. And the answer there would be no very clearly. Anything under 41.39 is a lower high. So wherever we top out, I'll need the clear pivot if it's going to be a convincing trend change. But we can say it's holding on better than QQQ as we hit a low a week ago and have not come close to that low since then, whereas QQQ and SPY were right on top of their lows or hitting fresh lows the last couple of days. IWM has also been holding on a bit stronger. Daily inside bar today, clear lower highs, scouting the weekly higher low. Simple statement is if we do not break 201.76, nothing changes, the bears remain confident. Top of the bounce, lower high, lower high, lower high. If we do not break 201.76, just another lower high. We have to look at it and say, this time it's different. And it's obvious in hindsight, but looking back at the S&P 500, we confirmed a weekly downtrend for the first time since the CVID bottom. And that preceded a big time drop. Because we could say, first time this has happened in 2 years. This is a different market environment. And so what we're looking at now is for the market environment from the last month plus, that has to change. And it's up to the bulls to change it. Biotech sector is a daily falling wedge as well. I'm less interested in this one. Doesn't mean it won't play out. But I'm less interested because it is still weaker. And we can look at IWM and say XBI is weaker than IWM. And we're often correlated to it. Sometimes we're stronger, sometimes we're weaker. But we did drop to a fresh low. The fresh low had 0 follow through, which is why we're scouting a falling wedge. But anything under 89.03 is just a lower high. We can go 7% and just be looking for a daily lower high. So it's possible if we were to get a bullish reaction to the FOMC, that we set a daily lower high and stay within this tightening range and do a little stutter step before a bull break. That will be on the table as well. Again, we're going to know a lot more information. And again, it's not just the 2 hours after the FOMC, 2 to 4 p.m. Wednesday. We got to see how the week settles in from there. And aggressive bulls are going to be looking, if it is a bullish reaction, they're going to be looking to make entries and place stops for swing positions under the current lows. But it all depends on Wednesday. Solar sector. Daily higher low trying to form. Did we change the hourly trend to the bulls? No, it was straight off the low. So that has to happen tomorrow. We have to set a higher low and a higher high to confirm the hourly trend change. If we do, the daily bounce is underway, but certainly cautious of a head and shoulders if we fail the recent high of 77.81 and then lose the daily uptrend. that will be a notable loss of momentum. So keeping an eye on that. I thought I would be trading the solar sector a bit more, and I did take, I forget when I traded it, but it was uneventful, and just keeping an eye on it, but I have more comfort trading the EV names like Tesla and NIO. Uranium also has to be cautious of the head and shoulders. We're scouting the daily high or low. The hourly trend change has not happened. If we get the hourly trend change to the bulls, bulls have to be cautious of a daily lower high and loss of the uptrend. The burden is on the bears to prove to us the loss of the daily uptrend, but we can just visualize, okay, that's something we just need to be aware of. We can be looking bullish on the daily, but we need to be aware of what will be a red flag if this plays out. Oil still very weak, 4-hour oversold bounce, not doing much. Potential 4-hour bear flag. We had a stair-step pattern for a long time. It broke with no follow-through, failing the hourly trend change. So overnight, oil bulls must hold the low and break the high of 98.37 to get that 4-hour bounce going. And again, we have a lot of space. This looks like a blow-off top to me. In the metals and in oil, it's more convincing in oil because of the percentage moves. You know, after that blow-off top, what are the odds that oil is going to turn around and go another 50% back to the high, 40%? It's possible, but it's not the most likely scenario for me. Best case for the bulls at this point, in my opinion, is just trading around within a tightening range. And you look at gold, and it's a big pullback as well. Still looking for the higher low compared to 1878. Tons of space for a daily lower high to be the result of the next bounce, but it's also a weekly uptrend. And we are scouting a weekly higher low. But again, when you get this amount of volatility, I mean, look back here. This was much less volatility, but we had a low. We had a high, we came down and got right to support. We broke it, but just barely. But look at how long we traded within this tightening range. And you could say different macro environment, yada, yada. Sure, but I mean, we can trade within a range of this size for months. Set the weekly higher low, set a weekly lower high, set a weekly higher low. And if we pull back on the FOMC reaction, and we're either going to pull back further and create even more space for a tightening range, or we're going to set that higher low and then scout the lower high. Trade today that I took on the live stream this morning was, I did stop out, break even. First things first, I headed into the morning saying, okay, higher open. I know what a higher open means recently. It means look short. And so I entered a bearish position on QQQ through SQQQ, and fortunately got this pullback to be able to sell half and then just stop out on a new high of the day, break even. So, okay, if the bears had controlled things again and we said, here we go again, I would have had a nice win, but I stopped out break even. From there, I saw that gold was weak. And look at the open on gold. Market open 930. So we started with a 10-minute bull move and then gave it all back and hit a new low of the day. So the new low of the day was hit at 1010. Look at the miners at that point in time. This was 1010 right here. We are nowhere near the low of the day. That's a bull flag. So I looked at that and said, that is a glaring bullish correlation. The miners are holding on extremely well compared to the metal itself. I know any bounce in gold is going to help these miners continue their bounce. And so I entered a position in GDX and just stuck my stop. You know, at that point in time, we had hit 36.27 and we're just starting this bounce. And I just stuck my stop under 36.20. Just give a little bit of wiggle room. And if this is going to be a bull flag, I will have a position. And if it's not, I will stop out. And then I just rode the 5-minute uptrend. I just moved my stop up, move it up, move it up. And I exited right around here. So that was a nice win. And it was a passive one. I wasn't having to stare at it. I just set my stop and then would check in and move it up every now and again. From there, Chinese names had the volatility. We knew to bring, let's try that again. We knew they were going to bring the volatility. Talked about it in the video yesterday. I knew I was going to trade NIO today. So I did not trade the morning bounce first thing, and clearly gap downs are for morning bounces. We saw BABA, little bounce, pullback, V-shaped bounce, big pullback. Again, both directions. And if we're breaking things up, we've got our Chinese names, but it's BABA and Baidu on one side with the hourly setups, very similar. Baidu was a daily inside bar, so it's stronger, but the hourlies today were very similar. And then you got NIO and XPEV on the EV names, they're stronger. So we can break them off into subsectors. We got our Chinese name sector, and we got KWEB, which is internet ETF. It's more in line with the EV names. So that's how I'm just organizing things in my brain in terms of if I'm trading NIO, I want to watch XPEV. If I'm trading BABA, I want to watch Baidu, and vice versa, just for any signs of clues. So for NIO today, I was in flow state today for the first time in a while. And again, it's market environment related. We bounced today, and I trade bounces as one of my edges. It's my favorite kind of play. And so I was a lot more aggressive, like I said, with trading today, but I was still trading in both directions, but it just was really comfortable. And one thing I did today was average up. I added to winners before they were clear winners. So just an example of that, I saw NIO get way overextended. I remember yesterday, and I looked bearish. Okay, if you're going to shoot straight up off the low of the day, and if you're going to go 18%, how much is this? 15%? 18, nailed it. If you're going to go 18% with no 5-minute consolidation, I'm going to look to short you if you're in a daily downtrend. So yeah, it was a little mini short squeeze, and I missed this bull move, but I went aggressive shorting. I was watching the 5-minute stair step, but I did not wait for the stair step to break. I looked at this 2-minute time frame getting this extended. I saw the short-term RSI levels all getting into overbought territory, and this was aggressive because again, I was not playing off of any level. 1574 was the high of yesterday. I was not aware of that. I was just looking at this 5-minute and 2-minute time frame and saying it's extremely extended. Granted, I could have gotten in trouble and gotten trapped in a short squeeze. And in that instance, I would have stopped out at a day loser level. So my stop was not based on a price level. It was based on a dollar amount I was really willing to risk on the trade. So I did a couple quick little flips, but I had a pretty sizable position, and I waited for the break of 15 because I wanted that psychological break of resistance to short. Just like oftentimes I wait for a psychological, for extended, and then we get that final psychological break to mark a bottom. I often use that for bounces. So as soon as we got over 15, I started building a short position, and then I added to it on this 2-minute lower high. I was comfortable enough, I did a couple little flips, so I had an average at 15.22, and I sized down a little bit to do that flip. If I had an entry at 15.25 and 15, and 15.25, let's say, so average 15.20, sell a little bit. Now I entered before that, so first entry was low 15, let's call it 15.05, and then 15.25. So my average is 15.15. We pull back, we drop down under that level. I take a little bit off to give me my ammo back because I'm in two positions and I'm not going to keep scaling in. That's it. So I sell half. My average is now 15.22. I recognize a 2-minute lower high is entirely possible here, so I add it right back. And I went aggressive there, back to a full position. And then as soon as that bear break occurs, I know that I am in complete control of that trade and just let it play out for a significant amount of time. And I was scaling out, looking for a 15-minute higher low and watching EMA 12 support. I did not take this long trade. At that point in time, I was watching something else, but I forget what. It was a nice long trade off of 50. This was an easy one. Nothing about trading is easy, but when you do it for a long enough time, you just know that a 2-minute trend change back to the bulls, you look for a 15-minute higher low. And if it aligns with an EMA 12 support, it's even higher probability. And we had a hold of support here and the 2-minute trend change. It was a little double bottom, 14.25, 14.27. As soon as that takes place, you can make an entry and put your stop under that level. If it's the 15-minute higher low, you're right, and the reward is much more significant than the risk. And if you stop out, you're wrong, and it's a small loss. So I did miss that trade, which in hindsight was a good one. But again, I don't feel FOMO. I don't get upset with myself. I wait and I got the next one. So I see this pullback looking for, at that point I was on the 30-minute time frame, and I was recognizing, like I showed you the falling wedge on QQQ, I was more confident than not that an hourly bull flag was forming on QQQ. And it was a little bit of my gut, and then I check in and I find that 2-minute falling wedge. It confirms my gut in terms of that's the direction I want to be looking. And so I said, all right, if QQQ is going to be an hourly falling, if an hourly bull flag, I want an entry for this NIO 30-minute higher low, because if QQQ breaks bull, then NIO heads back up to resistance. So as that was starting to form, I got a real good entry here. I made an initial scale in at 1449. I would have entered one more in the 1430s with a 1420 stop, but got one fill. The bounce got going right away. And I added real aggressively here because of my confidence in the QQQ bull flag that was forming. I had an initial entry, and it was also, I went aggressive because I had a really good first fill. So if my average is 1449, and now I'm going off of 1445, and once we bounce this much, normally I start my position, okay, I'll enter 1449, I'll enter one more 1430s, but as soon as it bounces this significantly, that has to be the 30-minute higher low, or I don't want to be in the position. If you're going to give that the entire move back and drop to a lower low, that's a red flag for me. So as soon as that bounce takes place, my game plan shifts. I'm no longer scaling into any positions. My stop goes under 1440, and that's either the 30-minute higher low or I want out. So that means I have very little risk because of my good entry initially. So I recognize a 1 minute inverse head and shoulders with this double top. And I go aggressive here. And I entered a second position and a third position, tripling my position size because my risk was so small. And I was already up a good amount on the day. I was having at the end of today, I was probably up maybe a close to a 2-week maker, maybe a week and 3 days, we'll call it, whatever. But I had enough profit cushion that I was willing to go aggressive for this setup. And if it had failed and I stop out, I would have given back maybe a day maker, and then I would have slowed my trading way down. Again, when I'm in my flow state and I'm hitting it and it's working, I stick with it. I keep pushing the envelope. And then as soon as I get my, okay, that's a loss, that's my, okay, I'm chilling on the day now, and maybe instead of a 6-day maker, I'm down to a 5-day maker. I'm not giving any more of that back because I just broke my flow state. I broke my streak. So I would have stopped, but fortunately it worked out. So I doubled up, tripled up my position. We get the bull break. I start scaling out, scaled out one position in the upper 1460s. And then I just watch the 1 minute stair step. And I say, all right, I will enter the second third of my position when the higher low every 1 minute candle breaks. So I exited another third there. And then I was watching the 5 minute time frame as I watched the QQQ bull flag shape up. Equilibrium here. I did make one more entry, adding it back. It was actually on this one. Entered it back at 1455, sold the 5 minute lower high. So I was just in the zone flipping these little time frames, and then sold into the end of the day here before going live. And that was that. So I had some really nice wins in both directions on NIO. Clearly my winner today, and it gave me nice nostalgia for my most profitable trading ticker of 2020. Maybe last year, I forget. It was either last year or 2020, where NIO is my most profitable trading ticker. And if you keep this volatility up, again, I don't care if you go up or down. I am not in love with this company in any way, shape, or form. And I will just trade it in both directions because it is extremely liquid and extremely volatile. And I just market order, market buy, market sell. And that's the day. All about the FOMC. We'll see what tomorrow brings. I'll probably private live stream tomorrow for the FOMC. But again, I got my game plan laid out. If it's a bearish reaction, I will attempt to establish a position. I will risk a certain dollar amount to do so. What I would love to see is a bearish reaction, get bears confident into a V-shaped daily bounce continuation. But too much speculation at this point. We'll see what the setup tomorrow morning is, and then we'll see what the reaction is. I hope you're well. Do good things.